Introduction to Financial Statements. Practice. Problem 1. What is it? For each of the following items, state whether it is an asset, a liability, owner's equity, a revenue, an expense. Computers. Amounts that customers owe the company. Land. Owe on account. Accrued expenses. Returned earnings. Trademarks. Cost of goods sold. Providing goods to customers. Salaries to employees. Equipment. Interest payable. Owe the bank. Investments. Common stock. Advertising. Cash. Dividends paid. Items held to sell to customers. Providing services to customers. Prepared insurance expense. Let's see the solution. Computers is an asset. Amounts that customers owe the company. Asset. Land. Asset. Owe on account. Liability. Accrued expenses. Liability. Returned earnings. Owner's equity. Trademarks. Asset. Cost of goods sold. Expense. Providing goods to customers. Revenue. Salaries to employees. Expense. Equipment. Asset. Interest payable. Liability. Owe the bank. Liability. Investments. Asset. Common stock. Owner's equity. Advertising. Expense. Cash. Asset. Dividends paid. Owner's equity. Items held to sell to customers. Asset. Providing services to customers. revenue, prepaid insurance expense, asset. For assets, for 1, 3, 7, 11, 14, and 17, those are all things that the company has and owns. For 2, this is accounts receivable, which is a future benefit to the company. For 19, this is inventory the company owns. And for 21, paying something ahead of time gives the company future benefit. This is not an expense until time passes and the insurance is used up. For liability, 4. This is accounts payable, purchased on account, pay later. 12 and 13, these are owed. 5. Accrued means not yet paid. An expense not yet paid is a liability. For revenue, 9 and 20, providing goods and services to customers. Expense. For 10 and 16, a service was provided that must be paid for. For 8, the cost of inventory that is provided to the customer. The asset inventory is used up, making it an expense. And owner's equity. For 6, there are profits and losses kept in the business belong to the owners. 15, owners put funds into the company. 18, the company paid a return of cash back to owners.